Vertu Motors saw its shares rise 5% at the start today on the London Stock Exchange after the motor distributor reported record profitability on a 16.5% rise in revenues. Chief Executive is Robert Forrester, and he joins us now with some more. Robert, welcome. In fact, you've got to look down the numbers. Adjusted profit up 15%, EBITDA 20% up, dividend up 7.7%. Good news for investors in the stock. How did you do it? What's been going on in the business that's generated this sort of record profitability?
Two things. We've undertaken a continued phase of growth, so we bought a significant number of businesses in the first part of the financial year, including getting the Mercedes-Benz franchise for Reading, Ascot and Slough, and getting Toyota and a number of other businesses, so that certainly helped drive profitability. But we've also made good progress in the organic business with a very, very strong used car and after-sales performance. The cash generation has been excellent, and clearly cash pays for dividends, and the board has a view that dividends are an important part of returns for shareholders.
What about the split between new and second-hand cars? Is there much differentiation between the two? Is it an evenly balanced business, first of all?
It's quite an evenly balanced business. We sell, the ratio broadly is 1.5 to 2 used cars to a new, is historically what the industry works on. We've seen new vehicle sales to retail customers coming off from about April last year. That's been exacerbated by the currency changes following Brexit. Used cars have been strong. We've seen strong like-for-like growth and strong margin growth, and that's really been the driver behind the results.
I want to talk about Brexit a little bit later on if I can, but let's talk a little bit more about the margins on the difference between used and new cars. Is there a difference? Do you get more from one strain of the business than the other?
It can depend on the manufacturer, but broadly it's about the same. The difference is I know what I've made when I've sold a used car, whereas with a new car, it's very much dependent maybe on a quarterly volume target. So actually you might not know how much you've made till the end of the quarter.
Yeah. I think you've got 124 outlets, I believe, around the UK. Any plans to change that number? Are you going to expand organically?
Yeah, no, we have a very strong balance sheet. We have net cash at the end of February. We've got significant debt finance facilities which we do not utilise. So our plan is to continue to scale up the business as well as looking at the ongoing portfolio and making sure it's right.
Yeah, one of the interesting things that strikes me out of the announcement today is that you've now moved online. I think there is an exclusive online business, isn't there?
Yeah, I mean, we've always been strong in the online area, but what does online mean? And actually, for the vast majority of people, it means going online to research a car, finding a car you might like, comparing it with other cars, and then contacting a retailer. What we've launched yesterday was full online retailing of used cars. And what I mean by that is you can go online, find a car, have your part exchange valued, have everything to do with the finance sorted out online in terms of electronic signatures. You do not have to visit a dealership if you don't want to visit a dealership, though I suspect most people will, and have the car delivered to your house. So full end-to-end online retailing of used cars, which we believe is pretty sector leading.
Why are you doing this? If no other company's done it, is it a plan that's going to work? Clearly you've got plans for it to work.
The customer is an evolving movement at the moment in terms of where customers feel comfortable online. We want to be at the front, not necessarily because I think it's going to revolutionise the way cars are retailed in the next 12 months. It isn't. What we're going to do is learn a lot. We've actually done this entire development in-house. It was quite complex, and we've learned a lot actually from doing it. And we've got a number of digital initiatives which come off the back of that, which will enhance the proposition for customers. It's about making effortless journeys for customers, not complex processes, and giving the customer the option to have an online capability has to be the right thing.
What about financing? How important is that to you? I know that some motor manufacturers themselves have a large financing operation, but how about yourselves? Do you make much out of financing?
We don't do any financing of vehicles ourselves, so we are a credit broker. So we introduce our customers to the manufacturer financing arms, as you've just intimated, or to third-party finance companies like Black Horse, Santander, the very well-known, or Barclays, the very well-known finance houses. Clearly finance is important because the customers a majority of customers do take out finance to fund the purchase of a car on various different financial products. So it's an important component. And actually, in our volume brands, one of our core marketing messages for much of the year would be 0% finance, where you can buy a car and pay no interest. So it's It's a complicated area. It's an area that's regulated by the FCA, which actually means it's quite a professional area because we have to make sure we comply with those regulations.
We know from anecdotal evidence from around the sector that it's been a particularly strong start to the year. Across Europe, actually, we've seen a lot of the large manufacturers report really good numbers. How are things for you as a motor dealership? Because my understanding is that the tax rules have changed, I think, on purchasing a car between March and April this year in the UK. How has this year started? How has April started for you? Have you noticed a big downtick in new car sales?
Our year end is the end of February.
Right.
So the post-year end trading period reporting on here is March and April. March is actually the biggest month for car sales in the United Kingdom because of the plate change. And actually it's the biggest profitability month in motor retail. So it's actually quite an interesting month to have as your first month. This year we've really got to take March and April together. Two reasons. You've alluded to the fact on the 1st of April vehicle excise duty went up. That clearly and was always going to happen. Why would you buy a car on the 1st of April if you can buy one on the 31st of March at a cheaper price? So clearly there was a pull forward. So the new car market was very strong in March and actually relatively weak in April. But the second thing that impacts retailers is the timing of Easter. Because Easter was at the back end of March last year, it was in April this year, and there's less selling days. So taking the March-April period as a whole, we saw a strong trading period with like-for-like profit improvements, so a good start to the year.
Yeah. As we all know, there's a election coming up, but there are proposals in the pipeline for politicians to look at ways of scrapping diesel cars. Is there a concern within the industry about this? Does it send shivers down your spine when you hear this sort of thing, a government involvement in anything like this? The proposals are to take all of the diesels off.
I'm a big fan of diesel scrappage programs.
Really?
The previous scrappage program, which came at the depths of the recession, came at just the right time for global motor manufacturers and retailers. It significantly boosted demand, significantly for new cars. Actually, it changed the history of some of the manufacturers. Some manufacturers like Hyundai have almost built their UK business at the current level based on the scrappage program. Frankly, we don't know what diesel scrappage looks like. It could be a very localised affair. It's clearly going to cost some money for the taxpayer. Question, would the manufacturers be part of that as well? They were last time. Currency is very different now. They've got different margin structures due to the currency effect. So I think it's unknown, really. A diesel scrappage programme can't be negative for us. It's difficult to consider a negative diesel scrappage programme. Is the talk about diesels in the wider media helpful? Probably not helpful, because it creates a degree of uncertainty in the minds of customers.
Have you noticed people refusing to buy diesels where otherwise they might have done so?
Refusing to buy diesels. For a good 12 months, there's been a lot of noise around diesel generally, and that's actually a problem, because the problem isn't diesel. The problem is actually older diesels. That's the cars that pollute the environment with nitrogen oxide. The government's going to take responsibility for this, because the government created the problem. By driving everybody into very CO2 efficient cars, it heavily promoted diesel. The bottom line is, if you have a diesel that you purchased in the last 8 years, it doesn't significantly pollute the environment. If you've got a very old diesel, 10, 12, Euro 4 specification, that's, I think, the area where the government will take action.
Let's get back to a point you mentioned. I want to bring up a share price chart at this point, because I think it's worth mentioning that there was, and indeed Vertu Motors wasn't the only one, going back to June last year, a big drop in share price because of the referendum, EU referendum in June 24th last year when the markets opened. There has been a small recovery since then, currently standing at 47.4 pence a share. First of all, Brexit. How does this change things for you, if indeed it does at all?
The immediate impact, if there is one, is on the new car market, because the vast bulk of cars are imported in from the European Union or from outside the European Union, and therefore the currency does have a potential impact in terms of manufacturer margins. And that can translate into higher prices, it can translate into consumer offers. And we've seen a little bit of that. But to put it into context, the SMMT yesterday changed their forecast for this year for the new car market and increased their forecast. Their forecast was for a new car market of 2.693 million cars. That is an historically very, very high level of a new car market. So I think you can get overexcited actually about the Brexit effect on currency on the new car market. 2.693 million cars is a lot of cars. And in addition, 70% of our gross profit actually comes from after sales and used cars, not from new cars. So the effect is there. You can see it in our numbers today in terms of new car profitability is slightly down, new car volumes are down. We've actually enhanced our margins in that area, but clearly it had an effect in terms of the market's perception.
So what do you say to shareholders about 47 pence a share, bearing in mind record numbers, your outlook? What do you got in terms of your intro this year?
The shareholders clearly need to take a view as shareholders. Have they, is time perspective important to them? But also, I think you can look at the fundamentals of our business. We have built in 10 years a very solid business with a very strong management team, a very stable management team that has a way of doing business that does deliver. We can buy businesses, improve them and deliver value. We generate a lot of cash conversion of 181%, and we've got debt financing facilities to go again and buy some more businesses. It's up to the shareholders what they make of the round of the announcement, but I think it's a very strong announcement.
Will Vertu looking different this time next year from it is at the moment in terms of size or shape?
It's always possible.
Right, nothing more. Robert, look, it's a pleasure. Thanks indeed for joining us for that. Robert Forrester is the Chief Executive of Vertu Motors, a company having reported record profitability over the last year.